Recording this video after close of trade Monday, 6th of June 2011, and thought I'd do a market forecast video today. It's been a while since I did my hypothesis chart, and I've been kind of talking to that over the last couple of months, and just had some thoughts today about how that kind of might play out in the future. So just want to kind of record those. In terms of the importance of this market forecast video, really don't take it all that seriously. The trading that I do, literally, I'm in trades for like 10 minutes, so putting out a forecast for the next 3 to 4 months is kind of a bit crazy, a bit kind of worthless in effect. The only thing I would say is does help me kind of crystallize my views in terms of where I want my overall capital to be. I do move my capital around into different FX accounts so that they're kind of resting in the strongest currency at the time. I see the biggest risk that we have as traders going out over the next couple of years is really maintaining the strength of your capital, being stuck in a currency that's declining, and I'm not necessarily referring to the US dollar by saying that, and making sure that you're kind of preserving your capital, keeping it in the strongest currency, and being aware of things like potential capital controls, FX controls, and big picture items that could really severely impact your kind of net worth. So this for me is kind of looking at how I think the world's going to play out over the next several months in order to understand what those big picture things are, so I get those right. So although my trading on my 5 to 10 minute type time frame is where I'm making my money, I'm making sure that I'm not losing out in terms of the big picture, in terms of having it stuck in a market or stuck in a country where I can't access it, or it kind of loses its value. I don't know if anybody's kind of been following this, but effectively that's one of the things that we have happening at the moment, and no one really is talking about it. A couple of articles on zero hedge and so on, but we have a bank run happening in Greece right now because the Greeks are shit scared that their banks are going to go under. One day they're going to be closed over the weekend. They're going to wake up on Monday morning and the new drachma will be in, and it'll be worth 60% of what their money was worth in euros on the Friday evening. So and all of that money being pulled out of those bank accounts in Greece is going into Swiss bank accounts. The Swiss franc is going to the moon right now, and it's people in Europe who are scared that they're going to lose their money by keeping it euros in bank accounts. So the reason for noting that the big picture is to understand those macro risks where you're putting your capital, where you're holding your capital, and whether you're going to be able to maintain that kind of the strength of that capital in the future in order to continue what you're doing. So that being said, 10 days ago or so I put out a video talking about some turning points that were coming out on the daily charts in terms of commodities, FX, gold, silver, and so on. Some of those have come due, some of them are coming due in the next couple of days, so I just wanted to revisit that and then put that in the context of this kind of equities kind of forecast that I put out. So here we go. This is the hypothesis chart, the original chart I put out. I've been talking to this over the last couple of months, and the hypothesis chart was put out on this day here, where I had these bars into the future and not changed a bar of those kind of on that hypothesis, and I'm pretty pleased with actually the way things have kind of played out. The rise and fall kind of got nicely nailed here. Not that the hypothesis is all about getting this right. It's about thinking about the way the market might play out in the future. It's not about being right or wrong in terms of hypothesis, just thinking about the way the psychology of the market is going to play out. Then we had a gap up to new highs up here, which kind of surprised me. I thought we'd just have a weak turn and kind of move into a downtrend at this point here, but we didn't. We kind of raced to new highs. Bin Laden high here up here at 1373. Do you remember that day on the Sunday evening when we supposedly killed bin Laden? Everybody got out in the streets with their placards saying woohoo, Well, that was the day you should have sold equities. Anyway, on the Monday morning, and a lot of the pros did. They knew exactly what they were doing, kind of managing those kind of emotional highs as places to get out. And subsequently, we've gone into a fairly strong kind of down move from the highs up here to the lows at the moment. I think we're down 7% on this move, kind of correction move so far. But I think we're going to find some support over the next few days, and there's some reasons for that. The average trade size at the end of today was relatively high. Had some professionals kind of sniffing back into the market, kind of buying these lows. There are some other things I'll show you on the other charts that are suggesting we might find a little bit of support. So I think we'll kind of have a little bit of a bounce from there. Maybe this is like a 50% retracement, something like that, some kind of Fibonacci or whatever retracement up here into a kind of a complex correction. We'll continue continue down. And I think the move down here will end where we have a cyclical turn, a cyclical support on the weekly charts, on the equities charts, and the move high to low kind of down here I think is going to be in the region of, I'm guessing, 10 to 12%, something like that, because at 10% that's a correction. It's a crash is at 20%, kind of notionally what people kind of classify corrections and crashes, and I think 10 to 12% will kind of be headline news, and that will be people saying, my God, we've just had this kind of stealth correction in the marketplace and no one told us it was happening, and it's just happened before our eyes. And that will be the point where the weekly support will kind of come in, and people will buy it up, the pros will buy it up, and we'll continue on to form a pullback and an end of trend on the weekly charts. And then the retracement move up here, that will be when we find our end of trend on the weekly chart, and I think that's when the real fireworks hit, and that probably, using this hypothesis, is going to be around September, October time. Typically seasonal kind of patterns kind of come due, all of those things, and those seasonal patterns are all because of earnings releases and so on. There's good kind of reasoning for why turning points happen at that time of year. So that's what I'm kind of viewing, and let me just spin through the charts just to show you why I'm seeing these couple of things kind of happening going forward. The first one is just to revisit this daily chart. This is the @ES.D. It plotted a lot neater on the @ES contract with the day and night session with pullback, end of trend, and second cyclical turn, and that's why this level for me was so important, because that was a second cyclical turn. Often is the start of turning points. So it was a pullback and end of trend on the other chart, and it didn't print quite so neatly on this particular chart. So just a reminder there. Just on the oscillators, so why I'm seeing a little bit of strength kind of coming into the market. I just mentioned the average trade size was elevated at the end of today's trade Monday, but also what we're seeing on the TRIN charts at the moment. So this is the adjusted TRIN value. We've had a couple of bullish divergence signals kind of print here. We've got the oscillator coming down. We're at -75 at the moment. That means over the next couple of days this will find some kind of support here and turn and go the other way. So that's why I'm suggesting over the next 2 or 3 days we might see a little bit of kind of strength in the equity markets and trying to find a bottom here. In terms of longer term charts, the 40,500 tip bar chart, we're now in a downtrend. We're below this kind of cyclical support that was at 1310. So this has got to find a pullback and an end of trend on this time frame, and I think it'll be around that kind of coincident patterns happening here in terms of better trend oscillator kind of turning up and a pullback and an end of trend on the 40,500 tip bar chart, so something like that. In terms of the better X trends charts, this is this kind of lip that I talked about, that I like, this kind of surfing analogy. We're under the lip here in the barrel in terms of being underneath this trend. I'm a little bit agnostic about this. I mean, this could end up being an exhaustion kind of selling signal here to pull this trend line, this trailing stop down, or we could just kind of bounce back up underneath it, and then on the second move down have an exhaustion kind of selling signal that will trail the stop down. So if you like, rather than happening over the next couple of days having exhaustion selling, I think the exhaustion selling is more likely to be at this point when we kind of come back down into the market. But as I said, could see this going either way. We could either get an exhaustion selling signal over the next couple of days and this trails down, or it's several days away, so not sure about that. But this is nice. This is kind of the way this kind of trailed down. We had this beautiful little cresting move here, and if you remember, the average trade size was extremely high here, as we had kind of professionals kind of coming in, as it was kind of here on the previous turns. So in terms of weekly charts, I mean, this is where we're heading down to this cyclical support area kind of overall. So just going back to the hypothesis charts, that's this point here. That's likely to kind of come in when we get cyclical support happening on the weekly chart. So you can see this is the S&P on a weekly chart, the index kind of rolling over, and we're these lines are starting to come together, and cyclical support be kind of printed there. So you can see this move just gradually rolling over, and it's the same pattern in all of the indices. They're kind of very closely correlated. Here's the NASDAQ rolling over, bearish divergence kind of coming down here, and these lines will start to come together on the weekly chart to find that support. Here's the Dow chart here where we had exhaustion buying, bearish divergence, again rolling over here. So you can see these lines are just starting to point down, so we'll get this kind of cross over the next few weeks. And then lastly, the Russell. No volume data on the Russell, but you can still plot the price cycles. Exactly the same thing happening on those charts as well. So those are the indices charts, and if you look at the daily chart, the Emini, exactly the same thing kind of happening. So that's where I see that kind of support coming on a weekly basis. So that's just a view on the hypothesis chart there, and so the reasons for these move, this is kind of like a 10 to 12% type move from those highs. This is kind of a little kind of a complex correction with the support that we've got, average trade size, trin, pull back and end of trend on the 40,500 tip bar chart here to kind of complete this move. And then this retest back up will be, that swing pullback to end of trend on the weekly chart, top out at whatever level it is, kind of up here, and then going into a kind of the final kind of bear move where everything kind of, we realize that we're really in deep doo-doo. And John Taylor's kind of from FX Concepts kind of forecasts about depression or certainly recession next year in the US with consecutive quarterly prints of negative growth and so on kind of coming true, and then the equity market really just starts to factor all of that in. It's interesting that on the kind of financial institution charts, things are really pretty weak. I should actually probably just point to that quickly, so just let me pull those up. So just to show you a few of those kind of financial institutions, this is Goldman Sachs, been a real kind of market marker in terms of highs and lows, and here's a beautiful end of trend warning signal here up at $170, which kind of marked for me the kind of the peak in the market, and we've been in a stealth decline ever since, really, in terms of kind of the Goldman Sachs chart. Had exhaustion buying, we had a flush signal right up here at the highs, all these amateur bars up at these highs, bang, and we're in a a strong downtrend right here. We've got a former pullback and end of trend on the daily chart on Goldman Sachs. Then if you go to JP Morgan, similar type of chart, pullback to, it was a dirty end of trend kind of here. We're below cyclical support, we're into a downtrend down here. So we've been rolling over for the last 3 or 4 months in terms of JP Morgan. And then you go to Citibank. I hate this chart in Citibank. This thing's unbelievable. Better momentum doesn't work right here, because this is where we had the shares, and I think there was a reverse split 100 for 1 or something like that. What was a $4 stock now is a $45 stock. Just garbage like this. But anyway, so Citibank's been rolling over. We're below cyclical support here. It's all pretty ugly, kind of going down. They're not looked at Apple lately, but Apple kind of appears to have kind of topped out here with an end of trend warning signal back kind of January, February, exhaustion buying, and we've just been making this kind of cyclical patterns, kind of waiting to fall into a downtrend. Probably one of the strongest stocks out there, so this could well survive up until the September, October kind of time period, and then start to a decline on Apple, a serious decline on Apple would kind of be showing weakness, from one of the strongest stocks in the stock market. Then lastly, Google again. So we had an end of trend back here in February on Google, and we've been kind of in a decline ever since. Maybe there's finally a little bit of bottom here. We've had a pullback and an end of trend, it looks like, kind of down here. Exhaustion selling on the downside. This is why I don't like particularly using the better indicators on particularly daily charts of equities, because the equities just jump around so much, and the only way you can smooth that out is to trade an index, or look at longer term charts like a weekly chart here. So weekly chart of Google, and things become a little bit clearer. Okay, so a little bit off tangent there, just talking about some of the equities charts. Let's talk about these kind of FX charts, because posted the video from John Taylor, FX Concepts, below this market forecast video, and he talks about changes imminently in the next 2, 3, 4 days in terms of a flip in the forex markets, moving to strength in the US dollar and yen, and declines in all of the kind of risk-on trades, so the euro, the Aussie, Brazilian real, British pound, and so on, all of those. I don't look at the yen, but I'll show you what I'm showing on dollar index, for example. So dollar index here talked about this, we had our end of trend exhaustion selling after that bullish divergence, and I've been looking for this kind of bottom in the dollar index over the last couple of months. This was, I think, a little bit of a rush to the doors here, the professionals kind of getting on board, realizing that they needed to change direction here pretty quickly, and we kind of just came into a little bit of lack of demand at this point, rolled over. Now what's interesting that happened today, Monday, we've got a cyclical cross happening here. Today's trade was a Rambo pattern here and a no supply pattern right down here, and you can see the amount of selling that we've had in this kind of move down has been fairly strong in terms of flushing out the sellers at that point. So Rambo patterns, a reversal of an amateur breakout, so potential reversal of an amateur breakout. So we break the highs of that Rambo bar, and then we're into a confirmed cyclical support level at that point, and that's the point that John Taylor's talking about, that we can now see this move back into dollar index and out of the risk trades, and you can see exactly the same thing kind of playing out. And it's interesting that it's played out in terms of Rambo patterns and kind of amateur down bars, kind of testing these lows and highs. Just cycle through these. Aussie dollar has come out. So professional up bar at the end of last week, you can see there. We've got this cyclical cross happening here. It's a flush pattern right up here at the highs. Monday's trade was an amateur up bar, kind of up there at the highs. So the professionals using Friday's activity to kind of get out, and potentially this will be an end of trend, I think, signal here if that wasn't a dirty pullback. So that'll be an end of trend on Aussie dollar. On the euro, here we go. Same thing, kind of this last kind of flush up. Everybody's saying, oh, finally, after not last weekend, the weekend before, we had all this news saying, the next kind of bailout package for Greece is all going to go ahead, and everybody's kind of thinking, fantastic, Greece is saved. Well, I think this is just this last flip up was an opportunity for the professionals to finally get their game on and get short. And we've seen exhaustion buying into those highs, a Rambo pattern, amateur bar right at the highs, no demand right there as we've got a cyclical turn happening here. So if that rolls over, same kind of deal. Gold, and then so that's in terms of the FX, but gold is the anti-US dollars. Like everybody talks about people rushing into gold when times are uncertain or there's risk and so on. I don't buy that. Gold goes up when the US dollar goes down, and vice versa. So we've seen a topping out move in gold. We had an end of trend that worked out last week in gold with these amateur up bars right here into these highs, and we've had a little bit of strength over the last couple of days, but Monday's activity was a Rambo pattern, an amateur up bar, no demand up here. We've got this cyclical swing that's kind of already played out, so could well see a rush into the US dollar over the next, tomorrow. It's like Tuesday, Wednesday, and then these things starting to roll over. The question is that move on Tuesday and Wednesday going to be an exhaustion down move, another kind of big, 1 to 2% kind of plus down move with huge kind of volumes? And potentially we could see that in order to kind of find a bottom and then rally on from there, which is kind of just going back to this hypothesis chart, which this is this point here. So I think we're going to potentially see some fireworks, and if those turning points are made in a stealth manner, if you like, kind of in the FX charts. If this turning point in the dollar index is just made very quietly, and no one but the professionals kind of notice this kind of going on, and then a couple of weeks later we're kind of back up to 78, 79 or whatever, and all of a sudden people saying, my God, actually the dollar might have bottomed there and gone the other way. Or is it going to happen, with fireworks where, Tuesday, Wednesday's activity, we get, one of these type of days where we have a huge kind of rush into the dollar, and is that going to be preceded with some, what would be obvious would be bad news out of Europe in terms of bailouts and Greece, Ireland, Portugal, and so on. So who knows what the catalyst, whether it's going to be, what the catalyst is going to be, and whether it's going to be an explosive mood or a move or a very quiet kind of turning point. But that's what I would suggest is going on there. So there we go. Just a little bit of kind of bigger term, longer term picture stuff. And again, as I said, my trades last about 10 minutes, but this is about preservation of capital and making sure you're seeing the bigger picture. If we are in for a recession next year, the equities markets usually forecasts the real economy by 6 to 9 months. So if you have a job, if you're not a full-time trader, day trader, whatever, if you've got a job, hold on to your job. Things are going to get hard. Make sure you're in a safe part of the economy or your company or whatever. It's like start preparing for bad news, kind of going forward, a lot of uncertainty and bad things happening in the market. So paying down your credit card debt, getting out of as much debt as possible, not taking risks, not going out and buying that new boat, unless you've just sold your company with an IPO, in which case I suggest boats will be cheaper next year. But anyway, I hope you're enjoying your trading. I am at the moment, so just a little bit of bigger picture stuff. Take it easy, trade well.